Welcome to the NZ Everyday Investor. I'm your host, Darcy Ungaro. I'm joined in the studio today by my co-host,
Tanya.
Tanya, first time in a long time.
Yes, I've had other duties to fulfill.
Yep, usually under 10.
Yeah.
3 under 10 will do that to you.
Yep.
So thanks for making yourself available. And thank you for the
My
babysitters.
pleasure.
And also in the studio with us is Sam Blackmore. Welcome, Sam.
Thanks, Darcy. Pleased to be here.
Yeah, now listeners might remember Sam from episode, I can't remember, episode maybe, I think it was episode
3 or 4 maybe?
Yeah, it was one of the few.
Yeah.
It was one of the first ones.
Yeah.
And the editing obviously is pretty poor in there, so I do apologize for that. But it does make good listening if you want an introductory session, I guess, in terms of how Bitcoin works.
Yes.
It's true. I
listened
listened to it and I understood a lot more after that.
There you go. That's my job, is to try and spread the message. So I'm pleased to hear that.
Bring enlightenment.
Yeah, exactly.
In Alice in Wonderland, what would you be? What character would you be?
I'd probably be the rabbit.
You'd be the rabbit,
I'm leading people down the hole.
That's right.
I'm leading people. People are chasing. People are chasing me. You know.
People are.
Yeah.
Oh, that sounds scary.
So we are going to go down the rabbit hole today a little bit.
Yeah.
Yeah, and that's okay. It's okay. So we're just going to take a little bit of a little bit of diversion. So a lot of the shows that we've done, we have kind of tried to mix it up a little bit on the show where we cover some pretty mainstream topics and go deep in something that people already get. But this is where we'll possibly take a little bit of a diversion and go kind of deep-ish, as deep as we can, into an area that I think everybody in this room would honestly say that we don't really yet know everything that there is to know, because it's changing so fast, right?
True.
Yeah, it's very new. It's a very fresh area. These technologies are very experimental, and not many people understand, how they're going to work and how they're going to impact
Cool.
things.
It's crazy, eh?
Yeah.
So we're talking about experimental stuff today.
Yeah, very much so.
You're not going to hear about this on any other show, I guarantee. Well, not in New Zealand anyway. I don't know. Maybe you will.
No, not many places at the moment.
Have you done any other podcasts, or have you been in any other sort of media situations?
No, normally just sort of critical articles in the Herald.
Yeah. What, just targeting you?
Every time a bad Bitcoin news story comes up,
You're the spokesman.
We usually
no.
get featured, but no. This is the most positive media sort of exposure I've had in a while.
So the real Sam Blackmore can finally speak up.
Thank you, Darcy.
Fantastic. Okay, so we'll start maybe by covering off what we were talking about before we push record. You coined a phrase. You probably didn't coin this phrase, but you mentioned a phrase, digital native, and then crypto native. So
Yeah.
do you want to just explain to our listeners what that means to be a crypto native?
Yeah, so sort of crypto native is definitely a new term. I mean, I think people are familiar with the idea of digital native and assume that kind of goes into that sort of.
I'm not. What's a digital native?
Okay, so a digital native is someone who's grown up with a smartphone in their pocket.
Okay.
So I didn't have a phone at school. I was
know,
part of the group
neither.
that didn't have a phone at school,
Yes.
and we had kind of like old BBC computers and one thing and another. But yeah, digital natives are what, I don't know if this is a bit of a sort of a patronising term, but anyway, millennials. Sort of it's sort of the group 35 and under. I don't know what the exact categorization would be, but. Yeah, anyone who's sort of grown up with a smartphone
Right.
is a digital native. So
Okay.
it impacts, or it virtually every aspect of their life is a smartphone is involved in it. Whether it's
Okay.
like their banking or their all of these sorts of things.
Sure. So our kids would all be digital natives.
I suppose.
Yeah.
Yeah.
Well,
Maybe even they could fall into the next category, which would be the crypto natives. Right?
I think your kids are going to be crypto natives.
really?
Yes.
Oh my goodness, that's scary. See, I had to explain to our son what an actual telephone was. That you pick up and
Yes.
he's like, "What are you doing with the numbers going round and round?" Just like, yeah. That was
No, that's
interesting.
right. Yeah. They won't have seen them. They won't
No.
have seen them at all.
So they might skip all that stuff and just go skip the whole digital thing. That's kind of, they grew up with that. So that's a starting point, right?
Yeah.
But what's next? I guess that's the crypto space, right? That's
Yeah.
going to be normal for them.
Yeah, crypto, being able to pass value to their Facebook friend in the UK or France or the States, being able to hold stuff hold value on their phones, not actually in a bank account, but in an app that they're in control of outside of the banking system. Being able to take out loans on decentralized networks, being able to collateralize their assets if they've got any into digital tokens. All of these sorts of these are very fresh concepts right now, but I think that it will become normal for people in the next 5 to 10 years.
So our boy, let's just say for argument's sake, he has an electric scooter that he's really quite fond of.
Yeah.
And it was given to him as a present, but he'd really like to maybe share that asset. Are we talking about maybe in the future for our kid, it would be quite natural for them to create a collateralized token that he could share with his friends, which represents time that they could use it and kind of create like a mini Lime scooter network amongst his friends? I know that's a bit out there, but is that kind of where this could go as an application?
Yeah, I mean, I think that situation is more sort of the sharing economy, and
sure.
Application for that sort of application, what would happen is that he would be able to say, okay, well, I'm not using my scooter at the moment because I'm in school, but it's parked outside.
Sure. And
then he could get paid in real time. So this is something which we didn't talk about before the podcast. This is actual live streaming of money. Right. So how you can live stream video. There are new networks coming online. One of them is the Bitcoin Lightning Network. And you can live stream money now. So what happens is friends would, click, I'm borrowing your scooter right now, and they'd scan his scooter QR code or whatever, the same way you do with Lime. And as they're riding it, his app would show the money actually being passed in real time to him, as they're riding
It's an instantaneous transaction. You don't wait till the ride is complete. It's actually instantly happening.
You can stream it. You can stream money. There's a very interesting service in Australia at the moment, and I can't remember the name off the top of my head, for temporary workers. So people who are doing seasonal fruit work and that sort of thing. And they're getting paid in real time as they work.
Right.
So they don't have to wait to the end of the week to get paid. They're actually getting streamed money
as they work.
Yeah.
So how is that different from, say, me just using my Visa card and automatically the money's passed over? How is that different?
Because of cost.
Okay.
So and also availability around the world. So the network, the Visa network generally takes 3.5%, and that can vary. So that's and also it's not in real time. So there's a lot of other smarts that need to happen behind the scenes to sort of realize the time that was taken to do it. Then you have to actually process your Visa card. I mean, you can have your card loaded up and one thing and another. Yeah. There's pros and cons to these things, but conceptually, streaming of money is possible now. Yeah.
Which is cool, right?
Yeah.
Because it is more or less, when it's digitized, it's just information.
Yes.
And it's information interacting with some sort of ledger to say you have more now as a result of me giving you some value, or the other way around.
Yeah.
And I have less now. But why would we have to wait for 24 hours before we can see confirmation of that? Okay. And you're paying a privilege for that, which I think going forward, people are going to be less and less willing to pay for something that's quite an analog way of trading value with people, right?
Well, it seems pretty simple, right? So why should I pay somebody to do it for me?
If something is cheaper, faster, more convenient, it's usually going to win, right? And that's pretty much the end game, as far as sort of blockchain technology goes, is that if it is cheaper and faster and more convenient, it's programmable, so it's easier for people to integrate it and build it into things than it is the banking network.
Yeah,
it's going to succeed.
Yeah. That's what, and I guess that in its purest form, that would be the faith, really well articulated from a crypto enthusiast, right? That we know. That
I'm an evangelist. I warn you now. You have to take that into account, right? And I always put the disclaimer out there, so you're definitely talking to a sort of a permeable.
That's right.
Yeah.
But it's cool though, if you think that something is cheaper, faster, better, it can do the job way better, then if it's not real yet, it's probably just a matter of time before it is real.
Yes.
And
If you can imagine it, it's going to happen probably.
Yeah, which is cool. And that should be an unnerving thing for our listeners, because most of us, well, especially I'd say 90% of our listeners will be, or even more than that, will be fully entrenched into the current monetary system. So anything other than that would be a little bit unsettling.
I would say I'd rather the word exciting.
Sure.
So I'd rather think of it as opportunities to create new commerce, opportunities to improve the way we work today, the opportunities to create new businesses, and for customers to interact with those businesses who couldn't interact before. So I think it's very exciting. I think it's going to be a fantastic leveler and create greater quality and more opportunity.
That's right.
So just for the sake of people who may not know what we're talking about decentralized financial systems, correct?
Well,
Wow.
Yeah,
I did some reading
Where
did that
before.
come from?
The tongue. That just rolled off the tongue.
But that's correct. That's what we're talking about here.
let's do that. Or, Sam, do you have a better idea?
Yes.
I couldn't express it any better than that, Sam. Yeah, so well done. That's good.
Just to clarify.
That is a great term, and that's pretty much the term which is, becoming adopted. Yeah, decentralized financial systems.
Yeah.
So what we have currently is a centralized financial system.
Yeah.
And if you look, we'll put a link on the show notes on an article that I think really sums up a lot of where this has come from in terms of this discussion. But if you look at what words would characterize the current financial system, there's words like centralized, opaque.
Yep.
What other words would characterize the current financial system?
Exclusive.
Correct. So not all of the population will access it. I think 25% of the world's population, according to the World Bank, don't have access to a financial institution or even to a bank.
See, that's crazy. I actually didn't realize. I mean, I suppose you don't really think too much about some of the, more third world countries and stuff, like how do they get access to things. And I didn't actually realize so many people do not have access to a financial system or whatever.
No, I mean, we're really fortunate in New Zealand. We've got a pretty good economy. We've got, a great underlying kind of export industry that supports the country in kind of an old-fashioned way. And we're just very fortunate to live where we do. But some people didn't have they lost the lottery when it came to where they were born.
Yeah, that's right.
And
geographically, they've been excluded just because of where they were born.
Exactly.
It's just not. It's not an equitable situation, and then that you wonder why there's such a big separation between the haves and the have-nots. Well, actually, that note was more 27%, not 25%. So that's a good chunk of the world's population that have been excluded from the financial system. They can't transmit value. They can't store value. They can't use it as a medium of exchange. They have to barter, or they just have to be poor.
They can't get ahead.
That's crazy.
They can't get ahead.
Yeah.
And so there's lots of really talented, smart people who are don't have. Well, that's a big philosophical discussion, right?
It is, yeah.
Don't have the same opportunities.
That's a different branch of the rabbit hole that we're going down.
That's right. Yeah.
But if you look at where this technology is going, this will be the great equalizer, I guess, in that space, won't it?
Yeah, absolutely. That's the way I see it, and that's what I find really exciting is that these sorts of technologies, moving them away from centralized entities, will allow anyone with an internet connection to access financial services. I think this has kind of been touted a lot of times, but the way I see it is that sort of the internet, the revolution of the internet was sort of the liberation of information, and we know the effects that has had. And cryptocurrencies, blockchain technology is the liberation of sort of financial services.
Gotcha. So now with the internet, thanks to the internet, the information can be free.
Yeah.
Widely accessible. It's out there. We all know that now. We can find out stuff that we didn't know before.
Yep.
Thanks to the internet. The next level is free transmission of value and storing of value, or just access to financial services. That's like the next level. But that's kind of because of blockchain, right?
Yeah.
So internet is that Internet 3.0? Is that what it's been coined as, or 2.0?
Yeah,
or?
sort of Web 3.0.
Web 3.0?
Yeah, there's all these sort of terms. Yeah, so that's the sort of general.
Yeah,
direction.
and for us sitting in New Zealand, one of the, well, arguably the best place in the world to live. It is a bit of a bubble, though, and I guess the risk with living in such an awesome place where politically it's fairly stable, economically it's pretty good.
Yeah.
The problem with that is that we don't actually see the issues, and we probably don't want or crave a solution because we don't see what the problem is as acutely as those that are in developing nations.
Absolutely.
But there is a problem out there, like, just take Venezuela. And one of the episodes we did was with Jeremy Couchman from Kiwi Bank. Must have been going back 3 months ago. We took a deep dive into the Venezuelan crisis and how they're trying to use cryptocurrency, or they tried to, the petro, to get themselves out of that. It's kind of a bit of a sidebar, but you can see how if you were living in a country which was under an oppressive regime, you're stuffed. You can't get out. You're trapped.
Not with Bitcoin. That Venezuela, there is that episode of them trying to create this sort of petro token or crypto. I can't remember the name of it exactly.
Yeah, the petro,
so they could still trade their oil.
Yeah.
But see, that was an example of a kind of a state crypto.
So it was still centralized in a sense.
Yeah, to some extent, and that's kind of there's no point in those at all, really. Whereas what's happened in Venezuela is there's been a massive uptake in Bitcoin.
Interesting.
That's the only way that people can protect their families. They're exposed because they were born where they are and they live in the country where they are, and the only way they can really, one of the ways is through Bitcoin. As soon as they can transact as much of their wealth into Bitcoin as possible. So, they're.
So it's interesting, because if you think about it in terms of, like the first world nation, sitting up here on a big perch, we're all happy. We don't need anything. We're sweet. All the rest of it, who cares about those little plebs down there in the valley who are starving to death and whatever? That isn't me speaking, of course.
Yeah. Yes.
But if you think about it like that, you can see how this could be the great leveler, because we've automatically already, to a certain extent, we've kind of discounted the power that is in blockchain and how it can change the whole ball game.
Yeah.
But those who desperately need some sort of sense of freedom and they need out, they're going to have the advantage because they're actually gravitating. They're way more open to these technologies than we are.
It's just a survival mechanism for these guys. That's why they have to look at these alternatives, whereas we're kind of a very laissez-faire in New Zealand.
Yeah.
And there's a lot of real innovation coming out of those countries because there's good software engineers all around the world who are building stuff.
Yeah.
So why do you think it hasn't taken off as much in New Zealand?
Well, it has. We've got over 6,000 users registered with our site.
Yep.
When you sort of compare our growth to Sharesies, it is less than Sharesies. So it's still people are uncomfortable with it. Still banks. We're very fortunate to have a banking partner that was prepared to understand what we do. So, but banks are very uncomfortable with it. People just it hasn't. It takes time. These things take time. It takes time for people to understand these things. And I think, when you ask people how the present monetary system works, they generally can't tell you. I don't really know how it works. I understand Bitcoin, but I don't understand how the present monetary system works. And when something new comes, it comes under a lot of scrutiny. And people ask, well, how does it work? And I'm not comfortable with it, and one thing and another, until it reaches that point where the crypto natives start to get involved, and they just accept it, because it's been around for 10 years or 15 years, and it works. Okay, it works. That I don't really understand how it works, but it works.
So you could just wait for your kids to show you how this all works.
Yeah, that's right. Yeah. So I think that that's part of the process. But
you mentioned a really good illustrator is using the Sharesies example, where effectively you're saving money in the equities market.
Yes,
it's quite a convenient and accessible way to do that.
Yeah.
This to describe for the listener what Vimba is all about. Just so that they know, because we didn't even give you an intro, Sam. Sorry.
That's all right.
CEO and co-founder of Vimba.
Yes.
And what would you say what's your elevator pitch? What do you guys do?
So we are a micro savings platform, but people can buy and sell Bitcoin and Ethereum instantly. So we allow people to dollar cost average, so a small amount, kind of like you do with KiwiSaver, into Bitcoin, so that you're kind of diversifying your saving strategy. That's one of our core services, and then people can also instantly buy with us or instantly sell with us. So we want to allow people to live with crypto in the real world. So for example, I save $50 a week into Bitcoin, and I have some Bitcoin, and suddenly I've got to pay for something, and I've got to pay for some maintenance on the house. I'll actually just go to Vimba and cash out $500, and the money appears directly straight into my bank account.
Yeah. So is it that easy? Because I know that there's only a finite amount of Bitcoin.
Yes.
So, how hard is it to find someone to buy your Bitcoin? How does it work?
Yeah, that's the great thing about Vimba. You don't have to worry about that at all. We just create this super simple interface where you've got your wallet. So we're non-custodial. That's another thing as well. Our users all have their own wallets. So we just provide kind of like a banking interface to your own wallet, so that you can use Bitcoin and crypto in the real world. So you've got Bitcoin on your wallet, and you go to our site, and you hit the sell tab, and then you just get a QR code which you scan, and you go, bing, I'm going to send $500, and it goes, we've received your Bitcoin, the money will be in your account in the next hour.
Okay.
It's cool.
That sounds easy.
And you don't have to worry about who's buying it or who's selling it or where it's going or anything like that. We abstract all of that for you.
So you're a translator. You're helping people translate into this parallel crypto universe and back again.
Yeah.
If they need to and want to.
A value transfer agent. I think that's our
value transfer agent.
FSP term.
Yeah. It just rolls off the tongue. And I've been using, and Tanya, I've tried to explain this to you, but I can only really explain it so much because I really don't know what the hell I'm doing half the time. But I've been using Vimba for, I guess, since we had you on the show. Before we had you on the show, I signed up to Vimba, and I've been putting aside a little bit every single week since then.
Yep.
And I've been dollar costing in to crypto, and so it's going into my. I actually use what's it called? A razor? Trezor, sorry.
Oh, you use Trezor. Great.
So I use a Trezor.
What's a Trezor?
Well, Tanya, it's that thing.
Blowing my mind. What is this?
It makes your legs look silky smooth. And it keeps your cryptocurrency in. Basically, it's like a USB stick, right?
Yeah.
Is this a
hardware wallet.
Yes.
Yep.
I heard you talk about that on the last podcast.
That's right. Yeah.
And you were my Bitcoin saver before, right?
Yeah.
Yep.
So we're New Zealand's one of our claims to fame is that we're New Zealand's oldest Bitcoin company. So we've been going since 2014. So we've evolved. The company's kind of evolved organically, a few times.
Yeah. Okay.
So sorry, you were saying
hardware
wallet?
Yeah, that's right. So I've been dollar cost averaging into Bitcoin since we had you on the show last, and it is surprisingly easy to do.
Yep.
And it is one of the things. I guess the reason why I'm doing it, it's not so much about trying to make a gain on the value of Bitcoin, but I kind of view it more as insurance against a very, hopefully a very unlikely event, which is. And forgive me, listener, this is where we start getting a little bit fringy.
No.
But against maybe a possible collapse in the current monetary financial system of some degree.
Yeah.
And so it's kind of like schmuck insurance. You'd hate to be the dude who didn't actually, or dudette, sorry, Tanya. You'd hate to be that one who didn't actually do something when you saw potentially a train wreck coming at some stage.
Yeah, I mean, I'm not a financial conspiracy theorist, but a lot of, there are a lot of Bitcoiners out there who are.
Yeah.
And it does, I mean, the present financial system does seem quite precarious in certain areas. What's happening in Europe right now with Brexit, the fact that the euro itself is a very difficult currency because, when it was initially... whether it was initiated, I don't know how it was originally dispersed. I don't know how you actually...
Yeah, it's coming out day.
Yeah, it's coming out day, that's right. You're in a very precarious situation because the economies that were disadvantaged when it was when it came out or when it was initiated, are feeling a lot of pressure now.
Yeah, that's right.
Germany's in a great position as a result, so they've kind of become imperialists again.
Yeah.
To some extent.
So if you look at what's happening over in Europe, you can watch what's happening with interest with Brexit. Closer to home, recently we've seen what's happening with the Royal Banking Commission in Australia, which will have a spillover effect into New Zealand. It already has. Over the last couple of years, we've seen significant changes to the way that banks are giving out credit, i.e. they're becoming way tighter. They're becoming way more thorough with how they assess applications, because their parent companies in Australia arguably have not been operating with the level of transparency that some people think that they need to have. And I think most people would agree that we would like to see a little bit more transparency out of the banks.
Sure.
So that whole kind of theme that's happening is just like a little bit of a signal that, if the banks start getting tight with credit, property values go down, access to funding go down, small to medium-sized businesses can't grow, redundancies increase. Actually, the economy starts to shrink when the banks are not as free to give out credit.
Yeah.
And this is just a minor thing. What would happen, if something big happened, if there was actually a real problem? That's kind of the event, the black swan event, right? That getting into crypto and putting a small amount into crypto can kind of insure against.
Yeah, it's geopolitically independent. Bitcoin is.
Yeah.
It doesn't. It's a world currency. It's a world asset.
So just contrasting that with how the current monetary system works and some of those words that would describe how banks work.
Yeah.
Give me some words on how we could describe how Bitcoin works and characteristics of it.
Well, it's trustless, and what you're really doing is you're putting your faith in mathematics rather than politics. So that's the leap that we've made, which is, I think, progressive.
Right.
So when it comes to transparency, the rules of Bitcoin are plain for anyone to see in the code. I mean, you have to, obviously, if you can't read code, you kind of have to accept that a lot of people sort of are reviewing the code and they are they're translating that message for you. So, but that's what it boils down to, is really this complete transparency, and your trust is based on the fact that it's Bitcoin is very predictable.
Right. 2 + 2 will always equal 4, and if it doesn't, there's an issue.
But, sorry, just coming from a sort of layman's perspective here. So if there's nobody kind of running the system, then how do I trust that? No one's taking care of it. How do I know someone's not going to, I don't know, hack in and do something bad? Or, it kind of blows my mind that there's nobody taking care of it.
Nobody at the wheel.
Who does it?
No, and that's
little elves, little Christmas elves.
That's a really common, sort of concern. One of the memes is that Bitcoin has no CEO, and it doesn't. So the way it works is the same way that open source software works. And open source software, believe it or not, pretty much runs 99.9% of the world's computers.
Wow. Okay.
And there's no company behind it.
It's not like iOS 20 or
No,
something like that.
no.
So this is the majority of computers run on open source.
Yeah, they run on Linux.
Right.
They run on Linux. So all the Amazon web servers, all the Amazon servers, all the Google infrastructure, that all runs on Linux.
Sure.
And so open source software is exactly what Bitcoin is. So Bitcoin is open source software. But open source software is where it's the inverse law of the commons. So the law of the commons pretty much says that if you've got a free resource that anybody can use, it will very quickly deteriorate because people will exploit it.
Sure.
So if you have a village in England that has a sort of a common grazing ground,
Yes.
what will happen is people will try to maximize their opportunity there, and before long that common grazing ground will probably be exploited by an individual who's managed to get more sheep or
Gotcha.
something, you know.
It's muddy now.
Yeah.
Yeah.
Now, the way open source software works, which is kind of the genius behind it, is that it's the inverse law of the commons. The more people that use it, the more people benefit from it.
Right.
You know, and you know,
effectively authenticate it and make it even
authenticate
more
it,
genuine.
contribute to it, improve it, fork it and use it for particular use cases in their businesses, spot bugs very quickly because there's thousands of eyeballs using the code every day. Very few software suppliers these days, will provide proprietary software, and I advise no one ever to buy proprietary software.
Right.
You should really, if you're building software, you should always build it on open source software. And this is how Bitcoin works. So it's open source. Anybody can freely contribute to the project. There's the people who have been there for the longest have got a certain kudos, and everything's peer reviewed and goes through a long process.
Gotcha.
And there's proposal. There's a whole sort of protocol for putting proposals through and one thing and another. So it's very transparent.
Gotcha.
But who decides? Like, say if you put forward a proposal or something, who decides that becomes part of Bitcoin system or whatever?
There's a kind of a stage proposal process that takes quite a lot of time, because they're very slow release cycles with Bitcoin because of the magnitude of the money locked up in the system.
Yeah.
So they're very careful about any releases that are put through.
So who's they?
They are the core developers. Generally.
So there is someone in charge.
Well, they're not really in charge because the Bitcoin software is distributed across nodes on a network throughout the whole globe. So I think it's 6,000 or 7,000 nodes run all over the world. Now, in order for Bitcoin to go through an upgrade, they have to reach sort of an 85% saturation point on the network before the upgrade kicks in.
Sure.
So those people control whether or not the upgrade actually gets released.
Okay.
So the miners have to accept the new software and install it on their servers for the upgrade to get. So it's a consensus approach.
Okay.
Yeah.
So you regretting asking that question, Tanya?
Your listeners regretting listening to this
I
podcast.
might Google a few things later, but
Yeah. So it's a consensus process. Yeah.
Right.
So a single person can't go in and tamper with the code and hack it.
Okay.
Unlike a centralized business. So a centralized business. So your bank, for example. There's been lots of stories of banks getting hacked and databases getting taken and one thing or another. That can't happen with Bitcoin because it's a long release process. It's a consensual process. A lot of people have to agree, have to review it before it.
Right.
And they're all incentivized in the same direction to maintain the
Correct.
integrity of Bitcoin.
Which is the key point, isn't it?
Yeah.
Because it's the incentive that drives them. That's kind of like the inverse law of commons, right?
Yeah.
So they're incentivized to preserve the system.
Yes.
No one's trying to get something out for themselves and look out for number one. It's in everybody's best interest that it's successful
Yes.
because they have a vested interest.
Yeah.
That's the beauty of it. It's like a network of people that are all benefiting as this network grows.
Absolutely. Yeah. And there, a lot of these people are sort of very philosophically driven as well. They think this is going to create a better place.
Yeah. Okay. So blockchain, simply put, it's a better wall to hang your art on. That's the best I could come up with after only one coffee this morning.
Yeah. Blockchain. I don't think anybody's got a view of how blockchain's going to impact us over the next 10 to 15 years. I think we'll look back and go, oh my God.
Is that right?
Yeah.
So even from your perspective, you're saying that.
I mean, decentralized finance networks, which I think we're going to talk about a little bit.
Yeah, correct.
In a minute, is something which I've started to explore in a lot more detail over the last 6 weeks.
Yeah.
And I'm kind of, it's funny, I find it very difficult to keep
Right.
to track with.
So that should be encouraging for the listener right now, who's probably at the halfway mark and they're going, "Whoa, there's just way too much." 6 weeks ago, you started kind of going down this other tangent because that's how fast things change, and you're already what some would consider quite an expert in this field, but you're still very much open to learning and trying to figure out how it's all going to work.
You've got to keep learning every day.
Yeah.
Yeah.
So let's just talk about that then. So I guess the platform for a decentralized financial network, we need to step back and talk about this concept called trustless banking.
Yeah.
That
Okay.
doesn't mean you can't trust it, right? Because that kind of, when I first read it, I was like, what do you mean you can't trust it? Why would you do it? But
It's
it
not
means you got
trustworthy.
no one you have to trust. Is that right?
That's right. So
Yeah.
it's not I don't trust it. It's that I don't have to trust it
Right.
to for it to work in the way I expect it.
Right.
You know.
And there was a phrase that it must have been Bruce Conlon that was, or I think he said that, you know, it's where two criminals can effectively trust each other.
That's right.
Yeah,
Yeah, I don't want to really use that analogy.
we can do better than that, though, right?
Yes. Yeah, but just to some extent, yeah. But yeah, it's trustless, as in you do not have a third party who has to. At the moment, the bank, when you send your money, when you go and buy a coffee, you know, you're literally your bank. You pay wave your card, and that goes to the bank. That checks that you've got enough money. The bank goes back to the coffee shop and says, "Great, this guy's got the money." Then the transaction goes through. Then the bank, you know, creates the transaction, and it goes to the coffee shop owner. Right?
Yeah.
Now, with trustless, is that and they're a trusted party in the middle that have verified you have that money in your account, right?
Right. So kind of like an intermediary
That's right.
acting on behalf of both parties to make sure that the transaction is fair and it's legit and they've verified it.
That's right. Yeah. Trustless. A trustless transaction means that I can send money from me directly to you without that third party in the middle.
Which makes sense if you think about it. You know,
Like
if you
cash.
don't have it, you can't send it. You know?
Yeah. It's cash. It's the same way as cash. So if I give you $20 cash, you accept that $20. What we've done is we've just digitized that cash, and you know. It's very difficult to do that, but that's what's happened. We've just digitized the cash. So Bitcoin's cash, and I can send it to you, and you could be. The difference is that we don't have to be face to face, and we don't have to use a political currency. You know, we don't have to believe in the New Zealand government. You could be, as I said, you know, on the other side of the world,
Yeah.
and in the same time it takes for you to receive an email from me, you could receive, you know, $5 for that coffee.
Yes.
You know.
Yeah. Yeah.
It's cool, isn't it?
Yeah.
You are physically giving her something which represents value, and there's nobody that knows about that. There's nobody that's trying to get a piece of that.
No.
It's just between you and her because Tanya did you some favor. I'm not sure what you did, but
Let's not talk about
let's
that.
not talk about that. But you don't have a hairy back anymore. So
That's
Oh,
That's right.
gosh.
That's right.
that's cool though. So that's
Yeah.
kind of the trustless in essence, right?
Yeah. Yeah.
So why do we need to move towards a trustless financial system, do you think?
Because it's better and not that difficult. You know, like
Cheaper, faster, more, better.
That's pretty much it. What will happen is that, you know, Bitcoin is something that people are sort of starting to take nearly for granted now, not quite for granted, but you know they're kind of accepting of Bitcoin, and Bitcoin is an asset. So it's easier to think of Bitcoin as digital gold. It goes up and down in value. There's a limited supply, but it's secure and it's been around for quite some time now. But day to day, Bitcoin is a bit difficult to use from you know, because the price does go up and down. So there's a whole lot of other sort of financial services that are needed for people to live in this, you know, decentralized world, and those are sort of stability, a stable coin. Those are the ability to take out loans and get some sort of credit,
Insurance.
and the ability to earn interest. You know, and those are kind of the three sort of key banking services that you would need to be able to sort of a decentralized services that you'd need to sort of step outside or have a trustless bank.
Gotcha.
Yeah, and then you've got your Trezor.
Yeah.
And as long as you've got your Trezor, that's your private key,
Right.
and that is your access
you wanna
to
just-
all of these networks.
So as those things are really available in a decentralized banking platform, then I guess that migration can happen from the current monetary system a little bit more freely because those essential services that you would need are now there.
People need credit in
Yeah.
order to build opportunities. You know, so they need credit to grow, right? So,
Yeah.
you know, that's one of the facts that drives our economic model.
Yeah.
The people want to be able to earn interest. You know, sort of it doesn't Bitcoin is doesn't return any dividend. You just have to rely on the price going up or down depending upon market supply.
Right, but that's quite a one-dimensional way of looking at it, right? So there's got to be something else more dynamic.
That's right.
Yeah.
So these days, what's happened is that new technology is coming online now. New protocols are being developed on top of the blockchain. It's sort of maturing to some extent, and these new decentralized protocols are enabling these core banking services.
Right.
So not only can people now hold Bitcoin in their wallet, they'll be able to hold a decentralized stablecoin in their wallet.
Okay.
They'll also be able to use their Bitcoin as collateral to free up cash for an overdraft facility,
Yeah.
and then they'll also be able to lend out their Bitcoin in a peer-to-peer decentralized network in order to earn interest on potentially their asset that they're holding.
Can you imagine microfinancing a goat farmer in Zimbabwe?
Yeah, easy.
That's how it's going to happen.
Yeah, as long as they've got a smartphone.
Amazing.
Just on stable coins. So from what I know, which is not much,
Thank you for your honesty, Tanya. Hey, honestly, there are 99% of people listening will be equally as smart as you in this area. So, we are rolling up everything that you don't know about finance with everything that you don't know about technology, and rolling into a big fatty of pleasure right now. So don't be surprised if you're left behind a little bit.
Yeah, we're definitely operating on the fringe here.
Yeah. So stablecoins are a cryptocurrency tagged to the US dollar. Is that right?
That's right. So the idea with stablecoins is that you can send them like an email. As I said, I can send cryptocurrency directly to anyone in the world, and it will arrive instantly. Okay, and that's a huge advantage there. But if I could send it and it would be a stable coin, then it's going to make business a lot easier.
Because it's not fluctuating
in
value
as value as Bitcoin. So, the present monetary system, it still takes 3 days to move money around the world. And I don't know the details of the network that enables that, but
Google the SWIFT system. Anybody who wants to know how things work when you're trying to send money overseas? It's interesting.
That's right, and they're improving things the whole time. There's no doubt about that. But they just won't be needed, because these decentralized networks are up there, and the SWIFT system is to some extent, sort of a Western system. Am I right?
Correct.
It's pretty much links to Western countries.
Well, yeah, you trace it all the way back to the Bretton Woods Agreement in 1944, and a lot of that stuff was born around there.
Yeah.
And there's a lot of interesting parallels between, by the way, just to take a bit of a side tangent, when I was reading up before the show, I was reading about the Bretton Woods Agreement and how the US dollar was effectively pegged to gold at one stage until Nixon kind of put the kibosh on that. But there was a lot of certainty because one US dollar always equated to some unit of gold, which was $35 an ounce back then. Now, we in the cryptocurrency space, we're seeing these stable coins that are effectively linked to the US dollar. So it's interesting, we're kind of going through this whole Bretton Woods stage effectively where it's tradable for some other thing, which creates stability, which makes trading with other users, I guess, a little bit easier, right?
Yeah, I mean, it could be pegged to anything. It could be pegged to the price of gold.
Or oil with the petro.
Or oil or
property, your house.
Yeah. It just so happens at the moment the global reserve currency is
the US dollar. Yeah, But if there was any other asset, and I guess this is where it gets really interesting, is that you could effectively do this with your house, right?
Yeah, so and that's what's going to happen is that people will be able to tokenize, create digital tokens for any asset.
Which is blowing my mind. And anybody who knows me knows that for the last 2 or 3 years, Tanya can attest to this, I'm obsessed with the whole kind of fractionalizing of real estate.
Yeah.
I think that's absolutely the way of the future. And if we look at how this can facilitate that, it's just amazing because now you can tokenize any asset and effectively create your own cryptocurrency for the asset that you want, right?
Yeah, I mean, I think the first thing that's going to become common is security tokens. So, this is the first obvious step, is where shares will get tokenized. So it kind of makes sense, right? People understand the blockchain's secure. Why don't we tokenize shares? Because it's going to create more liquidity. We can go down the pub and so I don't have any money on me. Should I owe you, I owe you $20 for this round here. I'll give you a Tesla share.
That's right. Yeah. That's a pretty expensive round.
Yes. How much is a Tesla share then?
It is.
So the share is $308.17
Okay,
US
that was
dollars.
a good round.
That's a very good round, man. Very
That's
We're
generous.
drinking the good stuff.
That's right.
That's pretty high.
It's the Elon Musk oil.
Yeah.
But so tell us, and Tanya and I were reading up on this last night, MakerDAO.
Whoa. Okay.
Tell me about that.
What is that? Let's start with
Let's
that.
start with that one.
MakerDAO. Okay, so MakerDAO is a very interesting project. Stablecoins. Stablecoins are going to play are kind of essential to the crypto ecosystem to really enable business.
Yeah.
People need a stable currency.
Yeah.
There's two types of stablecoin that are emerging. One are companies that are issuing stablecoins, and pretty much what they do is they have they're backed one-to-one with a US dollar in their bank account.
Okay.
So when you get their token, it's an IOU. But you can understand simply how that works, right?
That's right.
That's a very simple way of understanding a stablecoin.
Yep.
Now, MakerDAO is a decentralized stablecoin. So it's there's a number of moving parts to it. But what the project enables is people to create collateralized debt positions, CDPs.
Gotcha.
And what they can do is on the Ethereum. So MakerDAO is a project which consists of a number of smart contracts that are live on the Ethereum blockchain. So they can't be taken down. They are censorship resistant. Anybody can use them now.
Okay.
So that's the decentralized part of it, and that's the transparency as well.
Yeah.
And that's where it's providing advantages. So.
Okay.
Now you can create a collateralized debt position. You can deposit Ether, which is the currency which drives the Ethereum blockchain, into one of these smart contracts, and you will have to hold a collateralized position of a minimum of 150% more than the amount of DAI you want released.
Okay. You're with us, Tanya? I'm not even there, but I'm going to pretend that I totally get what you're saying.
Do we need a whiteboard? I hope we need a whiteboard.
I want a flannelgram, actually. Right behind you is a perfect wall for a flannelgram, and this would just be... You know what a flannelgram is?
No.
Tanya, do you want to explain what a flannelgram is for Sam? Help him out.
It's your old school teaching thing. You cut out the little pictures and stick it up there. It's kind of like magnets, but with flannel.
Oh, right.
Can you imagine, like, my two favorite things, magnets and flannel, in the same
go.
room? Anyway,
Perfect.
sorry.
Anyway.
It's a tough one, but we'll do our best to go through it, because there's a lot of richness here, and a lot of people who are into this space, they might be all over this, but...
Yeah, and I don't think that I've mastered the kind of domain language yet, so
That's
probably
okay.
aren't.
Yeah.
I'm probably not explaining this with real clarity.
It's hard to explain, it's hard to understand, but we'll just do our best we can. Yeah.
Yeah. So let's try and simplify this. So what happens is that you have a smart contract. You have to deposit collateral into the smart contract.
Okay, that collateral, as an example, could be...
It could be one of the next steps is they actually want to do digital gold.
Sure.
So this is a gold-backed token.
Right, a gold. So
create a
actually,
lot of
really, it
stability.
represents gold.
It represents
so it's tradable
gold.
for gold.
Yeah, tradable
Gotcha.
for gold. Yeah.
Yeah.
So maybe let's use that as
Sure.
an example. Okay. So you put in $200 of gold token into this smart contract.
Yeah.
And literally that's just like sending a transaction.
Gotcha. And whoever holds that could trade that for gold.
Yes.
Gotcha.
Yeah.
Okay.
But we've locked it into this contract, this collateralized debt position.
Great.
And then as a result, once that's locked in there and the contract is enabled, it releases or mints $100 worth of DAI.
Okay.
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 Now the DAI is stable to the US dollar.
Okay. So indirectly, the dollar is linked to the gold.
No.
Okay. We tried. We tried. Should we do that
No,
again?
no, that's not quite the case. So let's just go back to it's not what. No, the die is actually managed by game theory, but we won't go there right now.
Okay. Well, that's okay.
That's
So again, mathematics all over this, right?
Yeah, there's mathematics all over this.
can
So
trust
anyway, so you've got $200 of gold which you wanted to keep, but you need to release some value from, which you can actually use.
Sure.
So you've stuck it into this collateralized smart contract, and it's released $100 of DAI, which is always going to be worth $100, which is great. So you can use that to do whatever you need to in the financial world.
Okay. Yeah.
Now what happens is you say, okay, well I want that gold back now. You get $100 of DAI, you send it back to the smart contract,
Yeah.
and your collateral gets released,
I see.
and it comes back to you. Okay.
Right. Okay.
Now, what happens is if you that position is always going to be open for you unless the price of gold starts to depreciate.
Right.
Okay. Now, when it reaches a point where the collateral in the smart contract is only 150% the value of DAI that you've taken out,
Yeah.
the contract automatically liquidates itself.
Okay. So it's kind of like a stop loss, a built-in stop loss into that contract.
Into the whole DAI network, right? So you still got that DAI, but you've lost 50% of your collateral because that automatically liquidated,
Right.
right?
Wow.
So you can go and sell that DAI on the exchange for whatever you want and turn it back into US dollars.
The point is here, though, that collateralized.
So that's the game theory that stabilizes the coin, is actually the traders.
Yeah, right, because it's in their best interest to do that.
So they keep it always at $1.
Tanya, you had a question, or are you just going to go?
No, I have nothing to say.
Oh no! That's a
I'm not
bad
too far
sign.
away behind you. Don't worry.
That's a bad sign.
No, it's. But this is the thing, right? Like when you showed your parents how to use the iPhone for the first time, or use a smartphone, this was probably the same thing they went through. It's like, there's no way that makes any sense. There's no way that this could actually work. But
No.
it actually does work, and it's not going away.
I'm sure it does.
It does work. Yeah, I mean, as I was saying before the show, the real test for MakerDAO was last year in 2018, where there was a big correction in the price of cryptocurrencies, and Ethereum or Ether went from above $1,000 to did it go below $100 at one point? Yeah, nearly anyway. And throughout that period, the DAI stayed stable.
Right.
So the system was thoroughly tested. But coming back to transparency, the system is always over-collateralized.
Right. So there's always more assets backing that obligation, which is kind of the opposite of the reserve currency system, where there's only ever like if you take out a mortgage of $1 million from the bank, there's not actually a lot backing that. There's not really.
No.
They're just creating credit out of nothing.
Yeah, 10% reserve or whatever it
Yeah,
is.
so there's nothing there.
No.
So this is completely the opposite, where there's an over an abundance of collateral behind what it is that you're trading.
Exactly. Right. So you can have more faith in DAI.
Right.
And using it day to day, because it's you can trust it. You know that the system is balanced in a way that it's pretty secure.
So it's decentralized. It's more transparent.
Yeah.
And I guess in terms of being widely adopted, it's probably just a matter of time, right? If it is widely adopted, there'll be a tipping point where it sort of grows en masse.
Yeah, I mean, it's very. I just think it's kind of cool technology right now. I'm not quite sure how it all fits together.
Yeah, right. It's very early days.
There needs to be more DAI gateways, so on ramps and off ramps where people can actually trade DAI for US dollars or New Zealand dollars, and can move it both ways.
Yeah.
And that's kind of the next stage. But the sort of the mechanism, MakerDAO is the mechanism, and that's there and that's working. So how it actually sort of infiltrates our day-to-day lives, I'm not quite sure yet.
Yeah. Okay.
So you mentioned before a smart contract. So what exactly is that?
So a smart contract is just a piece of software, like and all software is a bunch of recipes, commands that have to execute according to certain situations, And that's what a smart contract is. It's a set of rules that have been programmed into a contract, and this contract sits on the blockchain, and it will produce different results, or it will execute in different ways depending upon the rules that have been set and the actions that are taken by the people who can access that contract.
Right.
So you could do any kind of contract on the blockchain, well, to some extent, and it's completely transparent. Once it's up there, it can't be changed, and therefore, you can do business or commerce or some sort of contractual arrangement with anybody anywhere in the world.
Yeah. So if you think about any sort of thing that represents owner, like dropping your kid off at kindy, and who is allowed to pick up that child for you, there's a transparent smart contract that sits there which has those rules all defined, right? Is that kind of
I think yeah.
something of value?
Yeah, I probably think it's more applicable to sort of more traditional financial
it
metaphors.
Sounds a bit creepy, actually. Using your kid as collateral.
Long-term investment, kids.
That's right.
Long-term investment, man.
Talk about collateralized debt obligation. Eh?
Yeah, that's right. It's a debt obligation.
Cool. Well, is there anything else, Sam, that you want to kind of take a tangent or do another little deep dive into? I know that we've tried our best to understand what it is that we're covering, but there's only so much that we can go because we're all probably in the same. We're all learning, right? But
yeah,
is there any other kind of area that you want to kind of drill down into?
No. I mean, that's the sort of the area I sort of wanted to discuss today. I think Make It DAO is the first project that if people are interested in this sort of thing, that maybe they can. It's approachable and they can.
Sure.
There's some great videos that sort of explain how it works on the front page. It's a very high quality project, and the amount of collateral within the Make It DAO network is actually growing rapidly.
And that was a question I wanted to ask you. And you might not be able to answer this, but just like in the physical world, what does it actually look like? We've got a couple of people, not a couple of people, hundreds of people, obviously, with computers all connected up, and there's a bit of code that's being shared. But how does it actually work? So if it is fed with real physical assets, is there some sort of custodian for those assets? Like, who's the gateway?
Yeah, so who governs the network?
Yeah.
Right. So this is decentralized governance, and this is the other side of the Maker project, which we kind of didn't delve into before.
Right.
So there is a group of people who own a token called the Maker token. Okay. And they determine the rules of the network. So, for example, there is something called a stability fee. And you have to pay that when you liquidate your DAI, and it's 0.5%, and that actually goes towards goes as a dividend to people who own the Maker token.
Okay.
Now, so what happens is that the rules of the network are voted upon. So people who have the Maker token can actually, depending upon how much of the token they have, they can vote on changes that happen to the network or rules that happen within the smart contracts that have been deployed. If a certain number of people vote for the stability fee to be increased, then or the percentage of collateral required to be increased or reduced, then they'll get dividends from people as the network grows. Okay. Now, if for example, they make a bad decision and the network shrinks, then what happens is that more Maker tokens automatically get made by the network, which dilutes their value, and they get penalized for bad governance.
Gotcha. Okay. So a little incentive is built in at every level.
The whole system is incentivized so that
it succeeds.
Yeah, it succeeds. Yeah.
Wow.
So so people are in control of the network, but anybody can be in control of the network. You can be in control you can go on an exchange and you can say, right, I want to be involved in Maker. I believe this project's going to be successful, so I'm going to invest in Maker because I want to get dividends from it, right? And at the same time, I can actually participate in the governance of this network as well.
Gotcha.
So you can actively help guide the direction of the network, and
much like you would investing in a company.
Yeah.
So, but in terms of, I'm just thinking in terms of what's securing this token. Ultimately, that physical asset, whether it's gold or a Lambo or a house. where does that interface occur where you can trade that for this? You can trade that digital thing for that physical thing. How does that work? Like, I know with a house, there's going to be a mortgage registered against the title, and there's that linkage right there. But if gold effectively is what's in this smart contract, more or less,
Yeah.
where is that held?
So I'm using gold as an example just to kind of simplify things instead of talking about ETH.
Okay, right.
Yeah. So
Yeah.
the moment the gold
Ether is the elephant in the room.
yeah. So Ether is we're getting we've got Ethereum, we've got ETH, we've got all these sort of
Yeah.
strange
Got some gas.
acronyms and
They're all
and terms.
cryptocurrency, right?
ETH is the currency which drives the Ethereum network,
Right.
and that's what you use to collateralize your debt positions in the MakerDAO project.
Okay.
But what they're working towards is multi-collateral options, so that you should be able to use anything for collateral.
Okay.
So you could use, hopefully your house one day, right?
Yeah.
And I use gold as an example, but the gold token that you can buy at the moment is the same as the centralized stable coins. So a company is which is audited and verified,
Gotcha.
holds the gold in
I see.
reserves, but releases tokens one-to-one that you can
Gotcha.
buy.
Gotcha. You're leveraging off that stuff.
Yeah, that's
Gotcha.
right.
Perfect.
So that's how that works. How we tokenize a house, I'm not quite sure.
Right. But it might be
now.
a similar sort of thing where instead of going to the bank for a mortgage, you'll go to another supplier.
Yeah.
And you're effectively tokenizing your home, and then those tokens would then be fed into this.
Yes. Well, what happens is then the governance people, the network has to vote on whether or not that this collateral is going to be suitable.
Right.
So the first additional collateral they've termed suitable that they've voted on using the Maker token is digital gold.
Wow. Okay.
Is this digitized gold token,
Gotcha.
right?
Okay.
Because it'll create even more stability. So if they enable a collateral which is unstable,
Sure.
and they make a bad decision, then they'll get penalized.
So they're incentivized to actually credit score, or they're actually looking at assets from a stability point of view and whether it's a good idea.
Yeah,
Wow.
yeah.
So again, it's all hardwired. It's decentralized.
Yeah, it's all in smart contracts.
And, and there's no hierarchical structure that's
No.
open to corruption or influence from government or shareholders.
Well, the people who have the most Maker tokens
Right.
can definitely influence the governance of the network.
Yeah.
So, and the Maker project was actually invested in quite heavily by Andres Horowitz, but they're incentivized to make this a success, right? So
Right.
they want to make sure there's good governance decisions. It's just what
Yeah.
every VC wants in its piece of equity.
Yeah. Awesome. So it's pretty cool though, isn't it?
It's very cool.
Because if you
I
look
think
at,
it's amazing. Yeah.
So if you look at the whole piece, in terms of history, like the whole kind of fascination for a lot of people has just been around the value of Bitcoin. It goes up, it goes down. Some people have done well, some people have not done so well.
Yeah.
But now that things have kind of settled down in terms of that discussion,
yeah.
finally we can actually explore the technology that's being developed, because that's actually where the real story is.
That's right.
And so this whole MakerDAO thing, that from your opinion, what you've been kind of looking at from the last 6 weeks or so,
Yeah.
in your mind, that's probably one of the more interesting developments that you've seen in a little while.
Yeah, it's I think it's the first stepping stone for people who are interested in this sort of decentralized finance
Sure.
area.
Yeah.
There's a couple of other projects that are definitely worth looking at.
Yeah, do you know much about Abra?
Yes.
Yeah, because I reached out to I can't remember his name, the guy who heads it up effectively,
Yeah.
and got an email back from him. It was quite amazing.
Yeah, cool.
He wants to be on the show,
Wow.
so I gotta go to Las Vegas, Tanya.
Sure, you wish.
But because correct me if I'm wrong, but from what I understand, you're investing in shares, but you're using blockchain to get to it, and then they translate it into shares for you. Is that kind of it?
Yeah, well, Abra, it's abracadabra. They've got a bit of magic going on behind the scenes there at Abra. Yeah, it's quite clever what they do.
Okay.
They're introducing ETFs and shares that you can invest in using Bitcoin.
Yeah. So it's not too dissimilar, I guess, to what Vimba kind of do, right? Where you're a gateway to that space.
Yeah.
You're same sort of thing with this is you could use the Abra service to actually
Yeah, we're a bit different from Abra in that we're trying to encourage people to actually use cryptocurrencies and hold them themselves and
Sure.
not just bet on the price.
Right.
We're trying to create a gateway for people to actually use them in the real world.
Right.
Where Abra is really kind of more of a investment gaming platform.
Yeah,
How
okay.
I would say.
Yeah, right, okay.
You probably wouldn't like that term,
That's
but
We'll edit that part out.
but yeah, Abra's very cool. They're non-custodial, which we are as well, and which we encourage.
Sure.
So they don't hold any cryptocurrencies.
Right.
You create a wallet on your phone. You have the private keys.
Gotcha.
So there's a lot of similarities between us and Abra,
Yeah. Okay, cool. All right, anything else that you want to go over, Sam, before we finish up?
Are we done, Tanya? I think we're done. Yes. No, I think
There's a little bit of
that's-
shell
I think
shock
that's
going
good,
on, I'm sure.
I think that's good. If people make it this far, they've done really
That's
well.
right.
Yeah.
It's very interesting though, like even just delving into it a little bit. I found it really interesting and kind of surprised that, more people haven't got into it than what they have. I mean, I'm sure that there's a lot more going on that I don't know about, but it makes sense, a lot of this stuff, and I especially like the idea that people in developing countries can get access to, to financial things just because of this.
Yeah, exactly. Yeah, I think it's going to be impact our lives as much as the internet has.
Right.
Yeah, we'll look back and go, wow, okay.
Fair to say that it might catch some of us off guard.
These things always do.
Yeah.
Yeah.
Like I'm thinking of every other guest that we've asked on the show what they think of cryptocurrencies or Bitcoin, and it usually not a lot of enthusiasm and not a lot of optimism around it, because I think that partly because they're looking at it as the value. They're looking at it purely as just an asset and speculating, and to a certain extent, if that's what the conversation is all about, then it's irrelevant.
Right.
It's about the technology and how that is
Yeah.
going to change things.
And that's really unfortunate. And that is kind of the situation with cryptocurrencies these days, is that when I was when I first got interested in Bitcoin in 2012, if you search for Bitcoin, the articles would be around about, the cryptography that was being used,
Right.
how the network was set up, the potential social impact scenarios, all of this really fascinating stuff, which was really, fired my imagination.
Yeah, right.
I see Bitcoin as a tool of liberation. Every time I send a little bit of Bitcoin to someone, I feel like liberating them, right?
Yeah.
But now when you search for Bitcoin, all you're going to get is Bloomberg articles on the price. You know
Correct.
what's happening in 6 months' time. This guy says it's going to go up. This guy's going to go down, and
Yeah.
that really
Dumbs it down. It
dumbs
really-
it down. It distracts from the potential of technology, and unfortunately, people get very cynical about it because I'm involved in Bitcoin, but I'm not a money guy.
Yeah.
I'm actually
Interesting.
I kind
And
of
that's
see
that's
myself, yeah.
that's the interesting thing that I think is really quite relevant, is that the money guys,
yeah.
those who do know it all or think they know it all, they're the ones that have made the discussion about the value of it, and it's just an asset, and it's just
Yeah.
like any other asset that we're going to trade. Those are ultimately the ones that are going to miss out.
Yeah, they're missing out on the opportunities because all they're looking to do is to make money, whereas the opportunity with Bitcoin and cryptocurrencies is to enable people to live better lives.
Well said.
Yeah.
That's cool. Any parting words of wisdom, Tanya?
No, I'm just interested to see where this goes and to learn more. Yeah.
That's
Great.
cool. Mission accomplished then, Sam.
Well done.
Well
yeah.
done, man.
Thank you.
All right. Well, thank you again, Sam, for joining us from. Now, I didn't even really mention this, but Vimba, where do they find you?
Vimba.co. Yeah, come on,
Too
give us
easy.
a go. It's
Vimba.co, give us a go.
Vimba.co, give us a go. That just rolled off the tongue there.
Wow.
We just make it super easy and safe for people to get exposed to Bitcoin for the first time. And we recommend people, we lead you through the setup, help you set up your own wallet, buy $20 of Bitcoin, and send it to a friend, play with the wallet, have some fun with it, don't think about the price, just learn how it works, understand how it works, and go on a bit of a Bitcoin adventure.
Yeah.
And then once you get your understanding, I would say it's really sensible to save a little bit. I really don't think it is, and as you
that's
do.
right.
So maybe consider maybe using Vimba to save a little bit each
Fantastic.
week is a good idea.
Cool.
Yeah.
Now, we actually have an affiliate link, so we'll put that link up on the show notes as well. And we do get a little bit of a kickback. I can't remember how it works, but we'll get a little bit of a kickback. So if you want to support the show in that way, that would be quite cool.
Yeah.
Check that out. And if you have any questions, then just, swallow those questions and maybe one day your kid will explain it all to you.
Yeah,
right?
If anyone wants to email me, it's sam@vimba.co. So, fire through questions directly there.
Wow, that's awesome. Thanks. That's generous. Thank you. Hopefully you're not going to get bombarded with my mother. Okay. All right. Well, thank you very much. And until then.
Thank you, Darcy.
All right.
Thank you, Tanya.
See you.
Bye.
Bye-bye.